Welcome, and thank you for logging into this resource. This is dedicated to providing you with additional information about St. Catharines, along with some effective strategies around investing in the region. As you may know, St. Catharines has been one of the fastest growing and price appreciating marketplaces in the country, primarily based on underlying economic factors such as increasing average income, decreasing employment, positive net migration, declining lending rates, and the effects of transportation, but most recently what we call the ripple effect. When it comes to employment, the largest employers in St. Catharines are Brock University, Niagara Health System, and the Niagara District School Board. These are all government-backed, well-paying, and secure jobs. St. Catharines is the only city in the Niagara region designated as an Ontario Growth Centre by the Ontario government. The city has seen an unprecedented level of activity in its downtown core, with over $300 million invested in projects that have changed the face of the city for generations to come. This activity has spurred private investment and garnered interest in its downtown's revitalization, inspiring new businesses to open, while catching the attention of investors from across the country. St. Catharines is located along the Niagara Peninsula, and development is restricted by Lake Ontario to the north and the world's largest greenbelt to the south and west. Furthermore, it is also restricted by the Niagara Escarpment, a global biosphere. Essentially, in St. Catharines, they're running out of land to build on, and as a result, St. Catharines is gearing up for a significant amount of intensification between now and 2041. St. Catharines has also recently experienced a shift in migration, whereby the largest source of population growth has come from interprovincial migration and non-permanent residents. Many of these new residents are looking to rent while they get to know the city. This is a great opportunity for landlords. The city of St. Catharines is expected to grow by 168,000 people by the year of 2041. This equates to over 80,000 new jobs. Under the GO Strategic 2020 plan, the goal by Metrolinx, amongst a number of other initiatives, is planning on converting trains from diesel to electric, which will have a significant decrease on commute times, along with increasing frequency of traffic and additional stops through the Niagara corridor and right into Niagara Falls. The recent effect of COVID on housing has really fueled what is referred to as the ripple effect. As a result of more virtual workplaces, many homeowners and tenants from Toronto area are leaving the city and residing in larger rental properties and homes in outlier communities. Essentially, people are driving until they qualify. As a result of these moving economic forces, more and more residents are moving into the Niagara region. A recent study by the Canadian Centre for Economic Analysis found that single-person households were the most dominant type of households in need of housing, and with a trend of an aging population, the city acknowledges the current mix of housing does not align with the future housing needs. As a result, the region's official plan promotes a diversity of housing stock in order to support this need for single-person households. For those of you savvy investors that are looking for some of the fundamental metrics, get your pens ready.
The current average home price in St. Catharines is $582,887, which is down approximately 2.6% versus the same time last year. When it comes to vacancy rates and average rental rates, a one-bedroom unit is 2.3% and rents for approximately $1,387 per month. A two-bedrooms vacancy rate is hovering around 2% and rents for $2,188 per month. And a three-bedroom vacancy rate is 2.3% and rents for $2,566 per month.
One of the most common questions that I am asked almost daily is, how's the market? And whether you realize it or not, when you're asking a question to an analytical realtor, what you're basically asking is, are we in a buyer's market? Are we in a balanced market? Or are we in a seller's market? The market intelligence tool to find the strength of the market, or otherwise what's known as the absorption rate, is what we refer to as months of inventory. A seller's market is defined as anything 0 to 4 months of inventory. A balanced market is defined as anything 4 to 6 months of inventory, and a buyer's market is anything greater than 6 months of inventory.
In St. Catharines, we are currently sitting at 5.9 months of inventory, which is considered to be a balanced market. This means based on current inventory levels, it would take almost 6 months for every home currently on the market to sell based on current buyer activity.
As an investor, all of these metrics are really important to help identify effective short-term or long-term strategies, as well as negotiation tactics. The most effective investment strategy that we see in St. Catharines is the long-term buy and hold, because of the realized and ongoing forecasted price appreciation and the relatively strong positive cash flow. If you want to learn more about St. Catharines, please don't forget to register for our Deal of the Week and our free investor reports using the links in our virtual booth. We hope you found this insightful and we look forward to helping you achieve your real estate goals in the future.